so the safety of your principal in your savings account means that you're guaranteed not to lose your savings deposit. Even if the bank or other financial institution goes out of business, the federal government is backing your deposit up to $100,000. Most financial institutions are insured by this agency called the Federal Deposit Insurance Corporation. And then if they're a credit union and not a bank, then it's the National Credit Union Association, or NCUA. Deposits in banks, no matter what type, are almost always safer than investments in the stock market. So investment in the stock market has the potential to pay more because the risk is so much more. Again, if this is your emergency fund, then this will be very important to you. Oops. Like the location of where your money is, okay, or any services that they offer. If you want to go get a loan later, if it's the institution that you've had a savings account at, then they look at that and they consider that, and you are more likely to get the loan. All right, we all want to earn as much interest as we can on our deposit while maintaining that degree of liquidity, safety, and convenience. Okay. Shop around for the best. We just usually call it interest rate, but it's annual percentage yield. Remember at the beginning of the lecture, in your area and for the type of account that you want. Again, you could have a regular savings account if you go to a bank, or you could have a CD at a bank, or you could go to one of those other kinds of funds, say at a brokerage firm. Okay, different accounts at different banks have different rules. Some of them have a minimum deposit. We know that there's a minimum on a CD, but there might also be a minimum on a savings account. Before you open an account, be sure that you understand the withdrawal restrictions, minimum balance, service charges, and other requirements. So if you had that $106 in a year in your banking account, your savings account at the local bank, and they came up with a new policy where they're going to charge you $10 a year to have an account, then that's more than the interest they're paying you. And so you might want to pull that out and go somewhere else. So you need to stay up to date with their service charges requirements. Okay, saving regularly will help you meet your goals. It's important not just to save, but to save regularly. Over time and with compounded interest, your savings can grow into a substantial sum. So if you've already watched the video that I posted, a maid and another person were able to save a lot of money. She showed you how fast that you could save up to $1 million. Okay. You can also, if you're working at an established business, then you can have your savings drawn directly out of your check as a payroll deduction. That would be an optional payroll deduction. Remember when we talked about the check stub and I showed you which ones were optional and which ones were mandatory? This would be a benefit, being able to do that, because it's a convenience to have that optional deduction, and that is something that not every employer offers. Okay? We talked about direct deposit a little bit before. It goes into your bank account. It automatically, you receive that non-negotiable. Remember that stamped copy of your check and stub notifying of you of the amount directly deposited. You can have your automatic deposit slip between accounts, with some going into savings and some going into checking. Okay? So it doesn't all have to go in one account. You can divert some of those funds directly into savings.
You was on here yesterday. You was on
Automatic deductions represent money you've authorized your bank and other organization to move from one account to another at a regular interval. That would be something that you would get into with the money market account, where they want a regular deposit. With a payroll savings plan, you can authorize your employer to make that deduction. Okay. Now this works it so easy. Some people find it convenient to set aside their spare change of money left over each day or week. Setting aside a small amount of change each day will lead to a large sum over time. You set aside 50 cents a day, then in a month that's $15. If you set aside $1 a day in a month, that's usually $30. And so at the end of the year, it's $365. So a lot can happen from a little amount set aside each day. Okay. So here's another spreadsheet showing compounded interest. And this is just from depositing $100 each year. Okay. So you're drawing interest of this amount, and you set aside another $100. So at the end of 4 years, that would be $450. So it grows pretty fast. And that's all the math that we've already talked through one other time. Okay, thanks for tuning in.